Big country reveal today, folks. The only country in the world that is both tax-friendly and that allows you to minimize, if all not together, avoid U.S. estate taxes without the need of complex multi-jurisdictional structures. So if you want to find out which country I'm talking about, stay tuned. Hello everyone, this is Javier Carrera, Research and Development Associate with Nomad Capitalist, and this is the place where we help 7- and 8-figure entrepreneurs go where they're treated best. And I want to shed some light onto an interesting topic today, which is often overlooked by some, but it is increasingly on the radar of most of our clients, and that is the transfer of wealth to the next generation, right? Doubtless, if you're watching this video, you're a successful business person, you're an entrepreneur, you're an investor. Again, big shout out to my stock guys, my crypto guys. I know you guys are out there. My global investors watching this video, my global entrepreneurs out there. You guys are very successful. You're generating hundreds of thousands of dollars a year, millions of dollars a year, tens of millions of dollars a year. And, we at Nomad Capitalist help you relocate to where you're treated best to make sure that your income is taxed as little as possible and make sure that it's done so in a legal way. Now, the thing is, income tax is one part of the battle, but when you're concerned about transferring wealth to the next generation, to your kids, to your grandkids, then one of the main obstacles in your way is estate tax and inheritance tax. Now, we do have other videos that talk about those taxes, and they are very similar, slightly different, but very similar. Just to give a brief overview, so estate taxes essentially work in a way in which when you pass away, the executor of your estate has to make sure that all proper taxes are paid, and once your estate has paid all taxes, then all assets left over in your estate are transferred over to your heirs, kids, grandkids, great-grandkids in certain cases, charities, well, although charities can benefit in many cases of some exemptions, but you get the picture. In the case of inheritance taxes, it's completely different. So in inheritance taxes, you pass away, your children, grandkids, or great-grandkids obtain the assets after you pass away, and then once they obtain those assets, they are liable for inheritance tax. And in many cases, unfortunately, your grandkids and your kids will be forced to sell the assets that you worked so hard to obtain just to be able to pay those extremely high inheritance taxes, mostly present in the West. So with all this scenario and taking into consideration that new wealth generation is a big concern nowadays with many people, analysts, pundits, and just the overall population feeling that Gen Z and millennials are not generating as much wealth as the baby boomer generation did at the equivalent ages, a couple of decades ago. So with all this in mind, exactly what we want to talk about today is the best strategies in order to avoid estate taxes and inheritance taxes. And in particular, we want to talk about the U.S. estate tax, and we want to talk about the secret gem country that allows you to be a tax resident under very tax favorable terms and at the same time avoid U.S. estate tax exposure. So before I get into that, let's talk a bit about the U.S. So obviously, if you are a successful person, in most cases, you'll have some U.S. exposure. You may not live in the U.S., you may not run a business directly in the U.S., but chances are, even if you have your wealth management account in Singapore or Switzerland or Luxembourg, that your banker at some point at least bought an S&P 500 index fund. Or maybe you're a shareholder in one of the top US companies. Think about your Apples, your ExxonMobils, your Chevrons, your Walmarts. It's very easy to be exposed to the US economy, and most importantly, to be exposed to what we call US situs assets, which are simply assets that are deemed to be located in the United States of America for estate tax purposes. Now, what is interesting to note here is that under regular circumstances, as a non-resident alien investor, you will have access to a very, very low estate tax exemption, which is at the moment the equivalent of $60,000 US dollars. So let's assume you're a very successful person, you have $5-10 million in stocks in the US, well, only $60,000 worth of those stocks will be exempted from estate taxes, and the other $9,940,000 will be fully subject to US estate taxes, which is charged at a progressive rate that can go as high as 40%. So just imagine that. All you've worked so hard to build, all that wealth that you have spent decades and decades building, essentially partially wiped out because the US government just puts their hand into your pocket and takes your money away. Now, there are several strategies you can put in place to avoid this. You can have a blocker corporation, you can set up a trust. Now, do take into consideration that trusts are tricky, so just simply having a trust is not a guarantee that you will avoid estate taxes. You have to make sure you work with a professional. You have to make sure that the trust is properly drafted for it to be a proper and functional and optimal estate tax blocker. Now, all of these strategies are possible. However, there is another strategy that is often overlooked, which is moving to this mysterious country that I am now going to reveal to you. Drum roll, please. So we are going to talk about one of my favorite countries on this channel once again, Switzerland, the Helvetic Confederation, once again proving to be a friendly hub for global investors, global entrepreneurs, and just overall a great place for the wealthy and the affluent. And yes, Switzerland is one of those 12 lucky countries that has an estate tax treaty with the United States of America. And it also happens to hold this very particular title of being the only tax-friendly country that has a good estate tax treaty with the US. Just to give you an example, another country that has a pretty solid tax treaty with the US would be France. But I don't want to make you move to France, because if you become a tax resident of France, any gains we make on the US side will essentially be lost on the French side. Ireland, for example, which is tax-friendly, we talk a lot about Ireland here and its non-domicile tax regime, also has an estate tax treaty with the US, but it doesn't have the same favorable provisions that the Swiss-US estate tax treaty does. And on top of that, there is also a question of interpretation of whether the treaty can apply to people who are under the non-dom regime to begin with, because it does clearly state that domicile is an important criteria. So if you're living under the non-dom regime, you are by definition not domicile. So the question of the applicability of the treaty may arise, and it is best to simply avoid it. Whereas in Switzerland, it is clear cut. You are a tax resident of Switzerland. You have a right to apply the US-Swiss estate tax treaty. Now, why do I love this treaty? And again, a second drum roll, because this is really cool. Second drum roll, please. So you remember how at the beginning of the video, I was saying that as a non-resident alien investor, you normally have right to a $60,000 exclusion from estate taxes in the United States with regards to US situs assets. So keep that number in mind, $60,000. If you're a tax resident of Switzerland, guess what? You get the exact same exclusion that a US citizen would just by being tax resident of Switzerland. At the time of filming this video, that's 13.6 million United States dollars. Think about it. You just went up from $60,000 to 13.6 million just by being a tax resident of Switzerland. Now, obviously, this doesn't mean you have to put aside any other types of strategies. You can still have your stocks inside of a blocker corporation, and you can do a whole lot of things. But what this allows you is the freedom to choose to simplify your life. Let's say, for example, for whatever reason, you don't want to set up a blocker corporation, you don't want to set up a trust, you just want to be old school. You want to have everything in your name. I'm Javier, the stock's in my name, the brokerage account's in my name. That's all I want for whatever personal reason. Right? We may disencourage it for asset protection purposes, but everyone is entitled to their own reasons as to why they want to do certain things. So in this case, you are able to, as a Swiss tax resident, have your US brokerage account, have all your US stocks in there, or own your US rental property in your own name, and you will still be able to have that beautiful 13.6 million exclusion from US estate taxes. Now, do keep in mind, this exclusion might go down as we await the US presidential election in November of this year, 2024. So the exclusion amount was increased under the Trump tax cuts, the formerly known Tax Cuts and Jobs Act of 2017. And with the sole exception of the corporate income tax rate, which was permanently reduced from 35 to 21%, all taxes relating to individuals, which include the estate tax and of course all the provisions that have to do with the income tax for individuals, will expire in 2025 unless Congress extends the act, unless Congress somehow takes that information and creates a new tax bill based upon what already exists. But if nothing happens, then the estate tax exclusion will go back down. But needless to say, it is still in the millions. Even if it goes back down, it is still much more beneficial to be in Switzerland and to have the privilege, the right, and the option to exercise this exemption through the US-Switzerland estate tax treaty than to simply be located in any other country and only have a $60,000 exclusion on your US situs assets. Now, all of this is great, and once again, showing that Switzerland is friendly towards the affluent. For example, let's say you want to move to Switzerland under the lump sum tax program. You can take full advantage of the US-Switzerland estate tax treaty. You can live in Switzerland, enjoy the great benefits that come with living in Switzerland in terms of lifestyle, in terms of security, in terms of privacy, and you can build a global portfolio of assets, including US situs assets, basically be able to rest easy knowing that a big portion of it, or at least a much larger portion of it than under regular circumstances, will be shielded from estate taxes. And on top of that, let me add something else that is very cool. In Switzerland, there is no federal inheritance tax. So anything you save on the US side will not be picked up on the Swiss side as long as you live in the right canton. Inheritance taxes in Switzerland are levied at the cantonal level, which means that if you choose the right canton, and therefore you only have to worry about federal taxation on inheritance, then you should be good to go. If your canton doesn't charge you cantonal inheritance tax, and Switzerland does not impose a federal inheritance tax, and as you also have the exclusion on the US side, you can basically transfer that wealth to your kids completely tax-free. And on top of that, if you also take into consideration what I've mentioned in some of my other videos about Switzerland, such as, for example, the fact that you can have tax-free capital gains in most cases. Again, I do want to emphasize, because this is very important, if you are a professional trader, if you qualify as a professional trader, if you do this full time, if that's your profession, then that does not apply to you. But for most people, 90% of people watching this video, and if you're just a successful lawyer, accountant, doctor who's made some good money over the years, and you're retiring and you're playing the stock market on the side, you do not pay capital gains tax in Switzerland. So imagine combining those two mega forces. Imagine combining the fact of being able to grow your wealth tax-free in terms of capital gains by being a tax resident of Switzerland. And by the way, you don't need to be under the lump sum tax regime to benefit from this. You can just be a regular Swiss tax resident and still benefit from this. And also the fact that you are shielded from estate taxes. So not only can you grow your wealth tax-free while you're alive, you can also make sure that your kids, your grandkids, and anyone else you care about gets that wealth essentially untaxed. Now, it is important to take into consideration that the treaty does have some details and some caveats. There are some ways to calculate exactly what portion of the exclusion would apply to your US assets. So there is a proportionality rule where they also take into consideration your Swiss assets. And for all those specific calculations, it is important to review all this with an attorney, review all this in your particular circumstance, in your particular situation. But let's say that under the extreme circumstances, if you have no Swiss assets whatsoever, it would be possible to benefit from the full exclusion in the United States. For all the viewers out there, please do keep in mind that when I say that capital gains tax in Switzerland is not levied, this only applies to movable assets. So that means your shares, that means your crypto, that means your bonds. However, if we're talking about movable assets, then that's another story. So that's why those comments are specifically meant for people in the stock world, in the crypto world, and overall just movable portfolio assets. Basically, those are the ones that are shielded from capital gains tax in Switzerland, and that's why they combine beautifully with this example of US situs assets. So, bottom line, if the idea of growing your wealth tax-free or close to zero tax, while at the same time ensuring that your kids and your grandkids get the wealth you've worked so hard to build, again, tax-free or as close to zero tax as possible, excite you, then make sure to go to nomadcapitalist.com/apply. We'd be happy to talk to you, and subscribe to our YouTube channel and subscribe to our Instagram for more handy tips like this. And I'll see you, my successful investors and entrepreneurs, in the next video.